Sometimes you wonder how something that you love very much is made. That's what this video is all about. So, let's take a look at this indicator. I got my good old box of Soylent here. Probably drank this whole thing this morning and probably another one this afternoon. And then I go in for a stomach replacement. All right, anyway. I do love that stuff. They're still not sponsoring the channel, but, you know, I do really love that stuff. Let's take a look at the charts and let's get this party started. Okay, the indicators that I like so much, are the MACD and the Stochastic Oscillator. So both of these indicators were invented by Abraham Lincoln while wearing this like top hat. There's his bushy beard. In 1875. Wait, that was impossible. Abraham Lincoln was dead by then. Okay, not that I'm happy he was dead. That sounded... Okay, that was in poor taste, although... Anyway. Let's talk about the MACD first. So the MACD is an indicator of momentum, so to speak. And it's made up of a few different things, but what you'll find is what is commonly referred to as a signal line. Sometimes you have another line on the MACD. And then you'll also get this set of lines above and below, which is referred to as a histogram. And in the middle of everything is what I like to refer to as the zero line. And for the purposes of what we're doing here and today, what I want to focus on is the zero line and what it means when something crosses that zero line. Okay, right here you can see the signal, the blue line, crossing above the zero line, and then it travels, you know, up, and then it comes back down and it crosses below that zero line. Okay, those are two really important areas on the chart. Crossing above or below the zero line is really kind of, for me anyway, an indication that there's been a shift in sentiment. And there's a handoff between the bulls up here and the bears down below. That when this signal line crosses below this zero line, that means the bears are in control. And if the signal line is crossing above that zero line, that means the bulls are in control. And it's not, of course, definitive, and it's not like a guarantee that something's going to happen, but it is a suggestion that something's going to happen, and it is an indication that something's going to happen. And it means that we want to sit up and pay attention. But we need something extra. We need something else. We need something more. It's not enough just by itself, and so that's why we're also going to take a look at the stochastic. So the stochastic oscillator is down here below. And the stochastic oscillator on your charts is generally set to 933. Those are the settings that you can use on the stochastic oscillator. And that's what usually you'll see. But what I will do often, and I recommend that you do, is I've increased the numbers. And what that does is it slows down the indicator and it smooths out the indicator. And so I changed these numbers to 70, 10, 10. Now you'll never see anyone else in the history of forever use those settings. And just to show you what I mean is I will add a stochastic oscillator to this chart, and we'll just use the regular settings that come up. So usually people will go 9, 3, 3 for the K, D, and whatever lines. And look at how different that looks. Look at the difference between how smooth this one is up here. That's smooth like Rob Thomas and Santana. And then this one is choppy. It's like Dana Carvey chopping broccoli. Chopping, chop. it's super choppy. And so I don't want super choppy. I want super smooth. That's what I want. Okay, so what we want to do is get rid of this stochastic oscillator from below. And what we want to do now is we want to talk a little bit about overbought and oversold. So on a stochastic oscillator, there are boundaries above and below. And when the lines go below the lowest level, we call that oversold. And when they go above, we call that overbought. And this is another way of saying, statistically speaking, and it's not a guarantee, that price has either gone too far down or too far up and is due for some kind of a reversal in the near future. Well, the question is, and this is always the question when you're talking about trading, the question isn't whether something appears to have gone up too far or appears to have gone down too far. The question is, when is it ready to actually do that? So there are indications or warnings or early warning signs that we've talked about here. But then there's the actual, well, when do we actually pull the trigger on a trade? And that's what I want to talk about right here. And that's why I invented the reversal tabs. So right here, you'll see a green arrow pointed upward on the chart. So I'm switching over to the charts here, and you'll see this green arrow pointing upward underneath the bars or candles. And it's very small on the screen here, but it looks on the trading platform like this, or on some trading platforms, it will look like an arrow pointed upward. So on TradingView, it's a triangle pointing upward, and on MT4, it's an arrow pointing upward. And this refers to the fact that, first of all, number one, the MACD has crossed above the zero line. That smooth MACD has crossed above the zero line. That means the momentum has shifted to the bulls. And then at the same time that happened, the stochastic oscillator, and this is the thing we check second, the stochastic oscillator is still oversold. And what this means is that we're still in deep, deep, deep bearish territory when that happens, and there's lots of room for the market to go up. When it's oversold, it means there's lots of room for the market to go up, and statistically speaking, we've gone down about as far as we can go. And these things in combination with each other are an indication that price wants to travel upward. It's not a guarantee, but it's a really great suggestion that price wants to travel upward. And that's exactly what the Australian dollar Japanese yen did here on the chart. And you can use this on stocks if you want, on ETFs if you want. I have some, if you're interested in ETFs, let me know in the comments below the video, because I'm working on an entire class centered around trading ETFs with this indicator, but I don't know how much interest there is out there. So that's an example of, right over here, a bullish reversal tab, and it's green, and it indicates that price may want to start traveling upward. Okay, and then off to the side here, we have a bearish reversal tab, which on TradingView looks like a triangle, upside down triangle. And then on MetaTrader is an arrow pointing down. And this refers to the fact that the MACD has crossed from above down to below the zero line, and the bears have taken control. And so that's number one. And ingredient number two is, at the same time this has happened, the stochastic oscillator is, you guessed it, overbought. Referring to the fact that there's plenty of room for the market to travel down. There's plenty of room for the market to go down. There's plenty of, well, that's it. There's plenty of room for the market to go down. And that's exactly what happens in this situation. The market starts to travel lower. Now, this doesn't mean it's a guarantee that the market's going to travel lower. In fact, there are plenty of examples where, well, that's a bullish reversal tab that does point to the market going up. But there are plenty of examples where we will see a reversal tab printed, like this bearish one right here. but then the market travels up. And that's why it's so important to have a stop. That we saw a suggestion, the MACD was traveling lower, the stochastic oscillator was overbought, suggesting that price could travel lower, but then price just went higher. So we could stop out really quickly on this trade and let price do whatever it wants, like really quickly, just right above the candles that formed the reversal arrow or tab. And we could do that every single time so that our stop loss is incredibly tight. So you could sell here, have a stop loss that's really tight, and lose practically or essentially nothing when we're wrong. And there's an example of maybe a bullish move that would stop out. But then when we're correct, have a really, really big profit target that is much bigger than our stop loss. And so I've obviously covered up the chart with my with my video. Hey, down there, how you doing? Wait, hold on. I gotta do that right. Hey, how you doing down there? Sorry I was in your way. Okay, that just didn't work. I apologize that so often, because I'm a one-man show, I cover up part of the chart, and I recognize that that's ridiculous and frustrating. And I'll make sure I don't do that again. Anyway, I want to thank you for being here and for spending some time with me. Now, there's a couple of things that you can do. Near the end of this video, up in this area, I will post a little box that says reversal tabs, and you can get this indicator there. And I'll do that in a moment. But first, a message from friends. Thanks so much for being here, everybody. You can subscribe to the channel right over here. You can watch another video right over here, or you can grab that reversal tabs indicator by clicking on the box in the upper corner of the video now. Thanks so much for being here. I'll see you next time.